Timer's ticking. Last chance to hit those likes. Let's get the party started. Yo! Let's go, fellas. Let's go. Joey, what's going on, bro? Super Saiyan, Jamie. Oh, man. Should be a fun day today, guys. Whatever happens, should be a fun day. Let's talk some charts and let's get a little crazy. Let's get a little crazy. Let's get a little crazy. I think we need, what do we need today? We need a little juice. We need a little juice today, guys, because I'm feeling today is going to be a little crazy, man. We'll probably go up, down, just to close exactly where we are now. You know how this shit works. But let's get a little flavor or a little bit of juice or a little bit of hip hop up in this bitch. Let's get it, bro. Let's get it. Who we got here? Philip, what's going on, bro? Let's get it, man. Let's get it. I think we need a little bit of this. Let's go, man.
Say make money, money, make money, money, money. Make money, money, make money, money, money. Money makes the world go round. I'm the talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla. Money makes the world go round. I'm the talk around town.
Let's go, man. Ruben.
I need that Skrilla on the Rilla. I need that Skrilla on the Rilla. Survival of the fittest.
What's going on, guys?
I've been broke. I ain't never going back again.
Shout out to Andre. We got Mustafa. It's gonna be a fun stream today, guys. We're gonna see volatility up the wazoo. Let's go, bro. Billy, I see him. Beta.
I need every red cent. That's why I brought my little scraper. You don't know me, homie.
Shout out to everyone in the chat, man. Shout out to everyone in the chat. Let's have some fun today, guys. We got Powell speaking in 54 minutes from now, but we got the FOMC rate hike that's the Fed rate hike that's going to come out in 25 minutes, guys. So we got a whole plethora of shit to look forward to in today's stream. I'm hyped up for it. I don't know what we're going to do, guys. I mean, this is, I don't like this little price action that Bitcoin did this morning, to be honest. I'm gonna be, you guys know me, I'm gonna always be 100. I'm gonna always be 100. I don't like this little, break of the previous highs for Bitcoin and then the send back below and you kind of deviating the highs. I don't really like this price action so far, but as we know it these days, guys, you're gonna see pumps and dumps in both directions. So to be honest, let's see how this plays out right now. But I don't like the look of this so far. I don't like the look of this so far, but that could change. That could change. So let's hold judgment. I'm gonna say hi to everyone in the chat. What's going on, Mike? He said it's stagnant. The Brock special. So what's going on, bro? Who we got? Spirit Channel said this won't wake up Asia though. Asia doesn't wake up till 8 o'clock. Asia right now is sleeping, but I bet a lot of the big investors in Asia are actually awake right now. Shout out to everyone in here. Horse Guy is long and strong today, guys. So Horse Guy's already long and strong. He's gonna be ready to freaking rock and roll, bro. Horse Guy is ready. What did he do today so far? Wow! Look at the Bitcoin price. It pumped all the way to 28,800. Well, I know Jordan said, well, if we break 28,800, I will go long. Did we break it? Let's see. Oh, wow. We got to 28,820. I am going long right here. Jordan said if we break this, we bullish. We broke it by 20 bucks. We are bullish. Bull market is back. Wow. Look at Crypto Rover tweeted $1 million by $1 million by June. Crypto Rover bullish too. I'm going all in. Let's go, fellas. All long. All right. No, but guys. So Horse Guy's long. We'll see if he works out. I don't think he's stopped out yet. I think he's got a little bit more room to run, but he's getting pretty close to a stop loss. Sounds like Super Mario. It kind of does. My Italian accent's pretty good, I gotta say. My Italian accent's pretty good. Simon said, I pumped and dumped this morning. Shout out to Simon. I did a massive pump and dump this morning. You guys might be a little dirty, but I actually did one of these. This morning, man. Shout out. Let me go. Let me see who else is in here. Let's see. Fake out, dump, and then pump. Let's see what happens, man. But anyways, man, I mean, it's going to be a fun stream, guys. We're going to have everything rocking and rolling. Powell's going to be speaking in the bottom left over here. But while we're over here reacting to Powell, because Powell is going to be a weirdo in about 51 minutes. But, guys, in the next, 10, 15 minutes, we should start seeing the price start going whang, 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 whang. Because, like we said, guys, we got the rate hike announcement coming up in 20 minutes. The projection is 85% that it's going to be a 25 basis point rate hike. I think it's going to be a 25 basis point rate hike. That's what everyone thinks it's going to be, right? This is the one time where this guy might be right. You know what I'm saying? Guys, everyone on Twitter is saying a 25 basis point rate hike. It's a 25 basis point rate hike. And then Powell will be hawkish. Okay, so get ready. I'm the macro LARPer on Twitter. And quite frankly, guys, nothing is bullish right now.
I see my house.
The macro is still bearish. Everything is horrible. Get out of markets right now. It's going to be a bloodbath today. That's what everyone's talking about on Twitter. An absolute bloodbath. So get out of markets, guys. It's going to be horrible. All right? 25 basis points and a hawkish Powell. All right? Get out of here. No, it's going to be 25, man. I think looking for 50s being too bearish, looking for nothing is a little bit, maybe being a little bit too bullish. You got to go with what the expected is, and that's going to be 25. So I wouldn't really expect anything else besides that, my guys. So that's about where we're at with this. Smack the likes. Interactive says smack the likes. Smack those likes, my fellas. Smack those likes. Let's get it.
Strap up. We're going to the moon.
Let's hope for a bullish day. Honestly, I'm kind of, right now, I'm seeing a lot of people getting really bullish today. I will say, like I said, guys, so far, I don't love the price action, right? But, what do we always like to say? Expect the unexpected on the FOMC meeting days, guys. But it's like on the 1 hour time frame, we kind of got this little, we got these highs, right? We deviated the highs here. Okay, so what we could do is typically when we see this deviation of the highs, right? If we're just going based off TA, I know there's going to be, volatility to the upside or downside. Maybe you see, right? So typically when you see these deviations to the highs, you do revisit the low of the range, right? So you could argue the low of the range, is this upward sloping trend line? You could argue it's like, this just general level here is the bottom of the range, right? So you could see one of these big old drops. You know how it is on these type of days, guys. You could see one of these big old swings to the downside, taking out all the longs, because you know people love trading these events, even though, right? You guys know what happens, right? It dips, everyone's like,
Everybody panic, we're going to zero.
and then it comes back up, everyone's like,
We're going to 100K tomorrow.
and then it dips again. But it could do one of these where it smashes all the way down, takes out all the longs, right? Maybe even comes a little bit lower than that, and then spikes back up, you know? And you got to sort of be okay with that. And if you are in a long, just be careful, because you know how these days are. They're crazy, they're volatile, they're a roller coaster, and it is what it is. If Bitcoin can reclaim here, though, there's obviously the bearish narrative where, you know, you guys know my take. I was looking for 28.8 as the major resistance level for Bitcoin here, right? So 28.8 was my key level. Why? Because there's so much shit there, guys. There's all these previous supports here on the daily, right? All sitting here. We got the 786 retracement. Now, if we do the fib from this high to this low, we got the 786 retracement sitting right there at 28,800 as well. So there's so much shit there at 28.8. That was kind of my target here. We already kind of hit it. So it's like, now what do we see? You know, that's the big question for today. Everyone's got an opinion. Does anyone know? No. You know, and that's about where we're at. I'm ready for either scenario. If we do see a pullback, to me, that'll be for buying. If we do see a pump up, let's freaking go.
Strap up, we're going to the moon.
We're gonna be over here. We're gonna start playing this song again. You know what I'm saying?
I need that Skrilla on the Rilla. I need that Skrilla on the Rilla. Money makes the world go round. I'ma talk around town. Remy gave me the sound. I need that Skrilla on the Rilla. I need that Skrilla on the Rilla. Survival of the fittest. You can sink or swim.
It's gonna be a good one today. It's gonna be a fun one, man. It's gonna be a fun one. Let's see. Tony Dang said with the super chat, bro. He said, liking the new background, bro. I see my house. Shout out to you. You see your house back here? You see your house? I see my house all the way back over there. Shit. Yeah, man. I see it over there. This is my office. I see my house all the way. It's right in this building right here, guys. That's where it is. I wish that's where it was. You know what I'm saying? John said, sitting in a work meeting, watching Jordan dance on stream muted. What a life. John, shout out to you, man. That's some dedication being in here during a work meeting. Who's at work right now? Let me know in the chat. Who's at work right now watching the stream low key when you're not supposed to be watching the stream? That is real dedication to crypto out there. I will say that. B Water said, hip hop called on 9-1. They would like to revoke your license. Hey, man, we got to do what we got to do. We don't have any options out here for the hip hop music. You know what I'm saying, guys? But you know, I still remain with my saying here, guys, is you gotta respect resistance when you're at resistance, just like you gotta respect support when you're at support, right? So so far we got a little deviation. You could call it a back test if we close back above here, but you know, obviously the levels we're looking for, guys. If Bitcoin does break up here, we should start seeing the price move probably in the next 10 minutes. About 5 minutes before the FOMC announcement is usually when you start getting like a roller coaster. Everyone's at work. Some people are at work or on the pooper. Let me know if you're on the pooper, bro. There's a lot of people on the pooper. But no, if this does pump up, guys, the next level I'm looking for is 31,300 here. So, you know, I think today is important to say, guys. And I always want to be transparent. Okay, we're at resistance. Okay, and I will say this again. If you're feeling uneasy, if you're feeling like shit, man, if things go to the dumpster fire, I'm gonna be fucked. Excuse my language. All right.
Rant alert.
It is never a bad time to take some profits at resistance, guys. I will always say that, right? Does anyone have any idea what's gonna happen right now? Absolutely not. Okay. Really, anything can happen today. And I think it's important to be transparent in saying that anything can be happen today, right? And not be pigeonholed. Now, what I think is going to happen versus what's going to happen, that's two different stories here. You know, I think that the two scenarios for me, and I still think we're going to remain in an uptrend no matter what happens today, right? No matter what happens today, I still believe the uptrend is going to continue, right? Obviously, if we get a pullback, right, we're looking for, you know, a couple different regions. 26.3 is a cool level that I'm looking at, right? 26.3 is basically, or around 26.5 is where you have this previous high from March, right? Or March 14th on the 4-hour time frame, right? The previous high right there. And you also have the 50 EMA coming in right there as for confluence, right? So that's a level where if Bitcoin does see a drop, right? And I see one of these little reclaims, right? Little W formation back above. Boom, that's where I go along right here at 26.5. We play this back up like a freaking hot potato up to the upside. The other level is the obvious one. Everyone's looking at this one. Are we going to get it? I have no freaking clue. But if Bitcoin does drop down here, right, to this 25.2, which everyone and their mother's looking at as a retest of this inverse head and shoulders, or you know, just the range we were in. Okay, we can also play that, right? We get a little wick below, we reclaim. Okay, we can play this back up to the upside too. Same damn thing, right? Same damn thing. You gotta. Today is one of those days you gotta be open to two scenarios, and you gotta be looking for shorts or longs because you're probably gonna get both entries. That's the funny part about today's price action. Usually, you're probably gonna get both price entries. You know what I mean? That's the thing. Really, I mean, I'm looking for another higher low. So if price comes down, right? We got a low. We got a low, we got a low. All I'm looking for is a higher low if we do see a dump today, for whatever reason. I don't know what the reason would be. All I'm looking for is a higher low again, and we play it back to the upside, right? Because the trend is still up at the end of the day. Even if we see a drop, nothing changes for me. I'm still looking for higher prices, right? If we do get a pumperoni, which I you know, it's one of those things you got to respect resistance, okay? So I keep saying that. You got to respect resistance. I think it's a higher chance we get a little bit of rejection from this level than pump straight through it. I mean, if you want my perfect honesty, I think it's more likely we get rejected here, right? And then come back up later to test it again and then break it the second time, than just smashing through it the first time. I hope I'm wrong. I hope we just smash through this shit and we go to the moon and we can say, F you, 28K resistance, we going into the 30Ks. Okay, but if we do pump, like I said, 31.2 is the big ass freaking level, bro. That's the one to watch. Skillful said exactly. Let's go, man. Let's go. Let's go. Jackson says gun go up. Let's see what the poll thinks. So we got 804 votes so far. Guys, get your vote in this poll, baby. Hit the like button. Let's get it. Get in the chat. Let me know what you think. Everyone's opinion matters, man. We got what comes first for Bitcoin. We got 30K or 25K. 64% of people think 30K. That is very high. That makes me very cautious here. If it was like 55, 60, I'd be like, okay, yeah, I kind of get it. 65% of peeps think that 30K is coming first. That is a very high number. That's a very, very high number for me, right? You know, and I don't know if I would agree with that personally. I don't know. It's tough. It's tough to say right now. But, you know, obviously, what's important about these events, guys, is you're going to see price action like this, right? Whether you're bearish or bullish, you're going to see price action like this. You're probably going to see, I don't know which way it goes first. You're going to see a dump, a pump, a dump, right? And it probably settles back where you're at. And then the true trend of where it wants to go is going to start, right? So don't fall for the first moves of the pump and dump and pump. Let it settle, right? After this meeting, let it settle. And let's see where the trend wants to bring us. If the trend wants to bring us up after that, cool. We play the trend. If the trend wants to bring us down after that, cool. We play the trend. But you're going to see spikes in both directions. So be careful today. Satoshi's going to go rug us? I hope not, man. Imagine Satoshi's wallet wakes up after like 10 years and all of a sudden just starts dumping the price. That's the funny part, dude. This is the exit liquidity special for sure. I would, I don't know, man. The thing about the exit liquidity is altcoins didn't really pump, you know? And I would think on a true exit liquidity pump, they would have brought up altcoins too, you know? And that's why I think, okay, yes, this short-term rally can be an exit liquidity. And yes, Bitcoin can get one of these little pullbacks like this, right? That's why, you know, I still think, even if you see something like this for BTC, I'm still looking for a higher low. I'm still looking for a bounce back up. Because for a true exit liquidity pump, I want to see altcoins move up. And that's one of the things I've been saying. The fact that Bitcoin's been leading this charge leads me to believe that this is a true rally. This is not one of those little fake rallies, because the fake rallies, the altcoins pump super, super hard, but the altcoins haven't been pumping. It's been spot Bitcoin. People have been buying spot Bitcoin, not on leverage. People have actually been buying actual Bitcoin, not going 100x YOLO like, I don't know, like this guy down the street. You know, this guy sitting at his computer today going like this. Where is he? Where is he? Why is he not popping up? Oh, here he is. Oh, look. We're 1 hour into the FOMC meeting, and Bitcoin's right out of this biggest resistance on the whole chart. I think I'm going to go 100x long. Oh, man, this seems like a great opportunity to go long. The biggest resistance on the chart and FOMC, where everyone usually gets liquidated. I'm going 100x. YOLO, YOLO. Right? You're not really seeing that much of that. You know, you could be seeing a little bit of it, right? From a couple peeps, but you're seeing people kind of just, you know, buying spot, you know. Let's see. Bro, BMB. I hate that guy, said Trevor. Mike said, no offense, I think alts are crazy overvalued right now. Alts will always be overvalued because most alts don't do shit, you know? Most alts will always be overvalued. You could argue that most of crypto is overvalued, to be honest, but crypto is based off speculation, you know? What's value? Value is what people are willing to pay for something, right? So how can you really say it's overvalued, you know? I could argue that gold is overvalued because you can always find more gold. You know what I mean? You can't always find more BTC, you know? Or you know, I guess you can make that argument for altcoins. You can. All right, guys, we got 8 minutes into the FOMC meeting. We're gonna start seeing some volatility. So I think we need right now, guys. All right, I don't know what's gonna happen today. Let's let this play out. But here's what we can say. Here's what we can say. All right, there's gonna be some volatility. Be careful if you're trading today. I don't want to see you guys get wrecked with wicks up and down. You know, woogaloo, boogaloo, sugarloo, sugarloo. If you're in shorts from up here, not a bad hedge, I don't think. I think that's actually a pretty good hedge. Just make sure you're protecting yourself because you're probably going to see a spike to the upside, a spike to the downside. Just be careful if you're trading out there today. All right, but let's get a little shit going here, guys. Let's get a little shit going here, guys. All right, it's time. Vikings, we have made it this far. We have reached the gate. This is the final resistance we must break to get back into the old range. We must break down the gate, break down the walls, and kill all these bears. Yes, I see you out there, Jackie Chan. You are kicking the bear's ass. Look at him. We must kick the bear's nuts today. One more time. Boom! Spam the swords, spam the shields, and we will pump this price to the moon. Let's go! I don't even know if you guys can hear what I'm saying, man. That's the funny part. I'm like doing a massive rant. I don't even know if you guys can hear what I'm saying the whole time. All right, Bitcoin did just wick below and now wicking back up. So, like I said, guys, I don't take too much of the price action pre-meeting too much serious because like this is gonna look stupid like later, right? This looks like this, but you're probably gonna see rank, right? It's gonna look stupid later. So you know, I always take the price action beforehand with a little bit grain of salt. I will say, like, I don't love the, or at least I didn't love the price action here of like the sort of, you know, the high, right? I didn't like the high, the deviation of the high, okay? That's usually not a good sign. But the one catalyst to that is this could easily just pump right back up, right? So let's let this play out. Let's let it do its thing. We got 5 minutes until we get the hike. Let's go, guys. If you get some secret info, make sure you put that. No, don't do that, because you guys are gonna be telling lies in the chat. Shout out to everyone in the chat, guys. Let's get it, man. It's Viking time. It's time to freaking let go. And it's time to do this, man. It's time to do this today. Here a wick, there a wick, everywhere a wick. Let's get it, let's get it, let's get it. Transaction pending, FML. Oh, you hear me? Let's go, bro. Let's go, man. Shout out to everyone. Who's feeling a little nervous right now, guys? Who's feeling a little nervous? I will say, like, this is, I'm sort of feeling like I said yesterday, guys, I'm sort of feeling kind of 50-50 here. Like, I can see the bearish narrative of you being at a huge resistance point. But I can also get the narrative of how Bitcoin's been kind of defying the odds lately as far as just pumping to the upside. Like, I can see both sides here, you know, and that's what makes it tough to call right here. And that's why I'm happy to be sitting in spot. I'm happy to be sitting comfy in some spot and not having to worry about, man, you know, I'm on the sidelines right now. What if this pumps to the upside? I'm screwed. Or, man, I FOMO'd in right at resistance at the highs. What if this dumps? It's nice to be a little, you know, comfy, kind of chilling like a villain here. Not having to really make any huge decisions at the current moment, you know? It's pretty nice. It's pretty nice. Sugar, we're going down. Clint said, slurp on that water drinking. Good man. It's tap water from New Jersey. It's not that good. It's pretty good water, Clint. It's pretty good water. All right, you guys can see down here. Fed Powell speaking in 33 minutes, guys. We're going to be live pretty much the whole day today. It's going to be a great time. It's going to be a fantastic time, if you ask me. What did Ethereum do? Because Ethereum, let's check on ETH. ETH did one of these. ETH just got, I don't even know what ETH is doing, man. It basically deviated the highs again yesterday. It came back below. Let's let this play out, right? Let's get the chart over here. So I got this little thing going. We got everything rocking here. We got, and then we can see the volatility really going crazy. We got Bitcoin up here. We got Ethereum right here, so we can watch, you know, Miss ETH, you know, everyone's favorite ex-girlfriend. We got Ethereum here, you know. Some of you guys are still married to ETH. I don't know why. She's a little bit volatile in my opinion. We got the S&P right here. We got the DXY coming in right here. So we can see everything here, and we're ready to rock and roll. We got 3 minutes until it. It's gonna be 25. I mean, we just see how the market reacts to it, my friends. Let's get it. Chewy's sitting here ready to hit that sell button at 31K. Let's get it, Chewy. Let's get it, man. I'm loving it. I'm loving it. 15K, then 3K. Good luck to you, man. Good luck to you. You know, my favorite meme right now is the event. There's a couple funny ones like this. The event hedger. I love these. Always hedging for events. 3 Fed speakers today, and I'm hedged for every single one of them. Lives in constant fear. It's so true. I had vegan and still working from home. You're not hedged for this? Good luck. I love these, man. These are my favorite memes. They're so stupid, but they're so funny. What's the other one? This one, the sideline or. This is probably a lot of people right now. The sideline or. Have you seen the VIX curve? That's always good. Risk reward is not there. Shout out to the sideline ors and shout out to the, you know, your little old event hedgers. You know what I mean? Shout out to you guys, man. Shout out to you guys. All right. Let's see what we got, guys. So, oh, look at this little wick to the upside. All right, so we got a little craziness going on here. Let me make sure I have this updated. Let me go over to Forex Factory here. Let me see what we got cooking in here. Let me refresh this bad boy. Let's see. Is this today? Yeah, this is today. FOMC projections, Fed funds rate. All right, let's see what we get, guys. Here, the volatility is about to start. Let's get it, man. Let's get it. We got Bitcoin right here. We got ETH. We got S&P. We got the dollar coming in hot right here, baby. Let's go. Let's go. Show us the charts. Here we go. Show us the charts, man. Let's do this. Let's do this, bro. Let's do this shit. Let me make sure I'm looking at Twitter. It's going to be 25, man. If it's 0, you're going to see a massive green dildo to the upside. Let's see. 1 minute. We got 1 minute in here, guys. 1 minute until FOMC. What will go down? How many peeps we got here today? Let's smack off that like button, my guys. It's going to be a crazy stream. We're going to have a lot of fun today. I think we need some epic music. We need some epic music for this shit. We need some epic music. Yes, we do. All right, we're getting a pump. 28,712. Let's see this, man. 5K by 5 p.m. All right. Got an initial pump, guys. Be careful of the initial pump. Bitcoin's getting a pump. Wicks back down. Get ready for the volatility. Let's see this, man. It's gonna be 25. We already know it's gonna be 25. Did it. 25 as we all knew. Yes, we all knew this. Get ready for the volatility now. Here we go. Seeing everything go crazy. Dollar's shooting down. Look at the dollar getting crushed, man. The dollar's getting crushed. Holy guacamole, look at the dollar, bro. Dollar's getting crushed initially. S&P's getting sent. Bitcoin kind of just chilling. Let's go, bro. All right, let's turn this off. All right, so we got it's 25. We got 25. It's what we all thought. So no surprise there. Check number one. No surprise. We got everyone over, going crazy. But yeah, we got a little move up to like 28.9. So let's see what happens now, guys. Let's see what happens now. Oh, we're getting a dump now. Here comes the dump, right? Here comes the dump. Ready for it? We're gonna see rank. Get ready for both sides. We just bounced off that support again. That's been holding us up this whole range, right? So this upward sloping support level, guys, where we got 1 touch, we got 2 touches, we got 3 touches, we got 4 touches, right? We got 5 touches. We just bounced off that trend line again, coming back up to the upside. So let's see what happens. So far, we got wicks on both sides. Anything new? I don't think anything's new here, man. Horse guy right now is going absolutely in shambles. He doesn't even know what to look at right now. Horse guy is like going crazy. Wait, what the hell is going on? No dump. Oh, it's pumping back up. Hold on, let me go back on. Oh, no dump. No, it's so close to my liquidation. Why did I trade before FOMC? I'm screwed. That was my rent money. Okay, I have one more. I have my emergency fund. Let's go long again. What could go wrong? I must revenge trade. I'm going in again. Long. No, why are we dumping? What the hell is this? We're dumping again. Oh, man. Horse guy. He got taken to school. He got taken to school today. He got taken to school, bro. His rent money is gone. Gonzo. Oh, man. All right, so now, guys, we got 26 minutes until Powell speaks. That's going to be the true test of what goes down here, guys. Powell coming in and speaking. Let's go, man. Super Mario is back. Shout out to Super Mario. Nothing burger until speech. Yeah, dude, it's every time. It's what the speech is the most important thing. The speech, not the hike. The speech is the most important thing, as always. What is Powell going to say? So far, it's been a nothing burger pump, dump, whatever, man. Little Scooby Network said, stop making fun of me. Oh, Lord. Rent money in. The rent money's in. So far, he's doing good. We'll see what Horse Guy does later, man. So far, so good. Look at we wick to, guys. We actually came up and tagged. Did we tag this? Yeah, we tagged the 786 to an absolute T. So the 786 got tagged almost to the dollar, to the absolute T. That's pretty crazy. Look at that, man. If we zoom in right there, look at that. Right to the 28877 level. Look at that, man. We tagged that level. So let's see. That was like the level I was looking for right there. So let's see what happens after that, my friends. Rip Horse Guy. Yes, Rocky. Rip Horse Guy. He so far he's up. So far he's up right now. He's doing pretty good. He got liquidated on his first long. Now he's up on the second one. Look at the dollar, man. The dollar's getting sent back down to the shadow realm right now. Dollar's on our way to the little old face down here. You see the face? You see this guy's face? Man, the dollar is on its way to Goblin Town. And then we got the S&P, which is flat, right? Not really doing too much, just like Bitcoin so far. What a rodeo. Let's see. Both the bulls and bears. I wouldn't say that. We haven't really seen what we want to see yet, right? We still need to see some crazy shit. Pal, get over your BS wizard meeting so we can your BS wizard meeting. Oh man. All right, 28,720 for BTC, guys. So we're kind of right where we started right before the meeting. Shout out to everyone in the chat. Who's out here? Who's out here putting trades in right now? Who's just chilling? Who's hodling right now? Who took some profits on this little move up right here? Let me know what you guys are doing. The dollar is dead. I agree. I've been saying I think the dollar is donezo. I think the dollar's gonna be coming down here to the 101.30 level. That's the level I'm looking at. Right? Ever since you were up here and you got rejected from the 618, rejected from the 618, rejected from the 618, you deviated the highs. Right? You look for the range lows, and that's why I've been looking for 101.30 on the dollar, and it's been going pretty much straight down there. Right? So quite the beautiful feat, and that's what we want to see for Bitcoin to go up, is the dollar to continue to get absolutely disheveled to the downside. This is on the daily, by the way, so this is not like a small time frame. We want to see the dollar continue to get disheveled, absolutely disheveled. You want to see the dollar sitting there with his hair all messed up like this, right? You want to see the dollar sitting there losing all its hair because it's stressed out why it's dumping so much. You want to see it looking so tired, so depressed, and red, dripping of blood, right? And I think right now it's a perfect time for our dollar dump sell. Bitcoin's still at 28.8. It's still in there, man. Woo! Woo! Altcoins right now really not doing too much. I'm not expecting much from altcoins until after Powell speaks. No one wants to take risks yet, you know? Stacks is getting to move up. Stacks always follows Bitcoin, man. If it's Bitcoin season, Stacks is the altcoin to be in, guys. Stacks getting up 5%. I like this song, man. I like my songs. I think I got good song choice. I think I could be a producer. I think I could go out there and find some artists and be able to pick out the best talent out there. I think I could be a good music producer. I think I could. I can find some good ass music, man. You guys are like, Jordan, your music choice sucks, bro. You got to get better music choices. Who we got? Rip Bitcoin after Powell speaks? We could. We definitely could. Go Bitcoin, win alt season. Well, if you go to Bitcoin dominance is in this white box, right? And I keep saying this, like, if you're going to see alts move, you want it to be from right here. If Bitcoin dominance breaks this white box and starts coming back up here, Bitcoin dominance is going to go to the moon. But Bitcoin dominance usually goes to the moon in the beginning of a bull cycle, right? Or at least from the beginning of the end of the bear market to like that transitory phase. We always like to make fun of the transitory phases. You know what I'm saying? So you usually see Bitcoin dominance skyrocket during that time. So for example, 2019, right? From that 2019 rally that Bitcoin had, dominance right here went up, 21% before it dumped. Same thing in 2020, the 2020 rally. Oh, sorry. This was the whole 2019 rally. And you saw dominance actually go up 40%. And then in the 2020 rally, when Bitcoin started the bull market, it pumped way harder than altcoins, right? And then dominance went up about 28%. Right now, from that low back in December, right? Bitcoin is up about 20% in dominance. So if it goes up 28, that will put it right at that 50% level. So I still think Bitcoin's the one to be in, man, right? I still think it is. There's obviously altcoins that outperform Bitcoin. You can find ones that do, but generally speaking, it's Bitcoin season, my friends. It's the Bitcoin season. Man. Clint, I'm going to keep slurping my water for you, my guy. All right. So far, nothing burger, guys. We're in the exact same price that we were right before the Fed hike. But we got 25. That's what we expected. That's honestly, I actually didn't want to get 0. I think actually 0 would have been bearish, because that probably would have shown the markets that something is very, very wrong behind the scenes. All right, so I'm actually happy that we got 25. It's probably the better outcome, honestly, but most people are like, if it's 0, we're going to pump. I actually disagree with that. If it's 0, why would the Fed do 0 instead of 25? That means something's hitting the fan behind the scenes, right? So 25 is a good thing, in my opinion. And then now what we want to see is, now we want to see Powell just say anything that's good. Okay? Literally anything. Just anything that's good if we want the price to go up. Okay? Just say anything that's different than what he usually says. If he says what he usually says, I don't think it's going to have a huge impact. I think it's just kind of be like, okay, maybe get that pull back to 25 or whatever. I don't think that, even if he says what he always says, I don't think that's going to change the fact that you're not going to dump back down at 15K, in my opinion. I think you're just going to look for another higher low above 20, right? That's really that. But we're still resistance. You got to respect resistance, guys, right? Despite the fact that we're in a meeting today, we still are holding this resistance to an absolute T. So let's get it, bro. Let's get it. Let's get busy. Let's see. Something's very wrong behind the scenes. Could be. We have no way to know. Powell can't help but be hawkish. True. I mean, he usually says the same thing every time, guys. So, I always go into these very pessimistically. I'm expecting Powell to say the same thing he always does, which is the same shit. Let me see what you guys are saying. RLC's going up. Check out RLC. Most altcoins are bleeding at the moment, but there's a few that are coming up. RLC. iExec. Let's see. Yeah, got a little bit of spike up. A little bit of a spike up. You basically came up right to this resistance point right here. So I wouldn't say like this is like, oh my God, we're pumping. I would say that would make sense for a high actually. Right there, because that's the true resistance right here. That's the true resistance looking left. This was kind of a little deviation. This is a little deviation, right? But like this is the true resistance right here at 209. So I would say that's a good point to obviously TP. Now you could look at this chart in a bigger perspective and say, is this just giant accumulation pattern, right? Because if you look at this for RLC, it's kind of the Bitcoin chart that hasn't broken out yet. Right? You got the left shoulder, you got the head, you got the right shoulder. It's kind of like the Bitcoin chart, which already broke out, right? So, a lot of it probably depends on today, my friend. A lot of it probably depends on today. So let's get it. Let's get it, man. Who we got in here? When is the meeting? It says it right in the bottom, man. 16 minutes and 50 seconds. It says it right down there. See the little timer down in the bottom left over there? You see it. I know you see it now. Shout out to you. I know you see it in the chat. Knucklebuster, what's going on, bro? Psychal said numbers released, but meetings tomorrow. No, meetings today, my friend. Let's see. The Fed statement is dovish, so will the press conference be hawkish? Honestly, we got to wait and see, right? Free Java? I don't have a choice, my man. Sometimes in life you don't always get what you want. It is what it is. I put 500 to 1K on alts to pump BTC Ethereum later. Right now, oof. I don't know if that's the best time to do it, but hey, you do what you want to do. All right, let's see what else we got, my guys. So, I guess I still come back to this monthly chart. Look where we actually came back to the monthly chart, guys. So Bitcoin actually wicked to the bottom of the wick on this monthly chart, right? Right at that huge monthly support level. You see that? Literally right there. So now you've tagged that. So now you're at that point, okay, we were looking for that to get tagged in the monthly, and that's where we say, okay, Bitcoin can still get one more spike to the upside, which it just did today, okay? But we just tagged that monthly low, right? The June monthly low, which I wanted to tag. Now it's at that point where Bitcoin definitely could get a pullback here, all right? I'll continue to say, though, this is the level to watch, my friends, okay? If you are a bear, you do not want to see this level get taken out. If you see this level get taken out, we're going to see significantly higher prices. But it really comes all the way down to this level right here. If you're a bull, well, really all you want to see from here is just a pullback on the monthly, and then we sort of get some type of higher low. We can take the trend later. That's really it. But I'll say this, like I'm looking at this as a big range. Let's just get rid of this, right? On the monthly time frame, we got range lows, we got range highs. If you break this level and then hold this as support later on, I'm looking for these retracements. I'm looking for 42K. I'm looking for 48K, right? But you got to break this first. I'm not saying right now. It's all about if then then. If someone tries to predict 50K right now, right as we're still under resistance, I think they're kind of a little bit of stupid. You got to wait to see how the market reacts and if we can break this first, right? But I still don't think that's impossible here. Let's just see what Powell says today. Because this could turn back over, and then we look for, is it 26.5 is a big level we can get a bounce off of. 25.2 is a big level we can get a bounce off of. Let's see. We got probably an hour. Actually, there's 13 minutes until Powell speaks. I would say we probably got 45 minutes. Then we get a way better picture of what we're looking at right now. Way better picture. Let's let it wait 45 minutes, my friends. All right, let's let it wait. Justice Gates said, Moonboy, you must be the one who sold your portfolio at 15K, my friend. Sorry, man. DXY, let's check out DXY. DXY, yeah, so DXY is just right here. So, I guess you could say you could get a bounce from this low, but like, it's one of those things. Charts are cool right now. Let's see what Powell says, because if Powell's bullish, this is gonna pump. This is gonna dump. If Powell's bearish, this is gonna dump. Right? So let's wait 45 minutes. Okay, it's fun to make predictions beforehand, but you don't really know. That's the thing. You don't really know. The only thing we can say is Bitcoin's at resistance. You should be looking for a pullback at resistance. If it pumps, that just means that Bitcoin is bullish as hell, and you should not be fading Bitcoin if this just breaks. If this just breaks through this, you should not be fading BTC. You should not be fading this, right? But you still got to respect resistance as long as we're below that resistance. Let's see. 15K. Yeah. Let's let the traders trade. Exactly. As this guy would say, right? Wait, was it? Is it this one? Yeah, it was this one. He said it's just the algos. You guys can't see it, but at the bottom here it says it's just the algos battling. It's just the traders battling right now. That's the only reason you're seeing this. Which actually right now you could argue it's just the traders battling because it's just up and down. Jim said bought a little more BTC at 28.4. Oh, like right here? You do you. As long as it's a spot, as long as you're buying spot and you just plan on chilling it for a little bit. Listen, if you buy Bitcoin at 28.4, you're going to be buying a lot lower than 99% of people are. They'll clown you for it, but you'll be buying a lot lower than most people will. Let's go to that CME gap at 21. There is still CME gap at 21. There is. I think, sometimes we get a little bit too caught up in the CME gaps, I will say. There's still CME gap at 9K. There's a CME gap at 1 cent, right? There's a CME gap, I think, at like 1K, right? There's still a lot of CME gaps. There's also CME gaps to the upside, So it's it's always fun to see what CME gaps get taken out, Let's see. The press conference is in 12 minutes, not 45. No, I'm saying like the end of it should be in 45. So we should have a better picture by the end of the press conference, right? It's in 12 minutes, but it's usually about a half hour long. We got 10 minutes and 44 seconds to be exact. It's going to be pretty dope. That's going to be the real battle here. That's going to be the real freaking battle here, my friends. Let's see. I'm going to hold off on altcoin charts, guys. I really don't think there's any point in looking at altcoin charts. I'm just being 100. There's 0 point in looking at altcoin chart right now, right? If you want my honest opinion. I could do TA on an altcoin for you. It does not matter at the moment. If you want my honest opinion, it could be in some bull flag. If Bitcoin dumps here, it's going to dump, Lots of John said, surprise, nothing burger party. We haven't seen the real thing yet. We haven't seen. I wouldn't get too busy saying that yet, John. We haven't seen the real thing, which we want to see, which is Powell speaking. The rate hike, everyone already knew what that was going to be. So that was going to be a nothing burger. But we need to see this. What is Daddy going to say today? What is Daddy going to come out and say? We are too bearish. Oh, bro. Let's go. Shout out, shout out. Shuri said, looks like a Darth Maul to me. I would say Darth Maul. Who's going to come out today? Is it going to be Vader? Is Vader going to come out today? You guys dare be bullish at resistance? You guys know the last couple times you were bullish at resistance. Remember you remember 26K? You remember 25 too? I do too. And you're going to remember this resistance too. Getting bullish at resistance. Get ready for it. He's waiting, guys. Be careful. Vader's waiting for you. You know, be very, very careful here, my friends. All right. I already have the Powell speech. Blah, 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 blah. Facts. But that's why the market's chilling here, guys. Because guys, if there was no FOMC meeting here, I think Bitcoin would have already been either through this level or dumped by now. The reason why it's sitting up here is because it needs to know what's going to happen today, right? And that's the most important thing. If it's a nothing burger, Bitcoin's just going to continue the trend that it's in, right? If Powell doesn't say anything new, right, and all the information remains the same, Bitcoin's just going to continue to the upside. If that's where it wants to go, right? And that's the key about today. Okay, maybe you don't get any more new news, but it allows the markets to continue the trend that they're in. Right now, people are scared. You know, that's why the price is just staying right here because people are scared about what's going to happen today. You know, if nothing comes out of today, and Bitcoin's really in a bullish trend, that's what's going to be shown today. That's going to be shown today. If nothing changes, and Bitcoin just pumps straight through this right after, that tells you all you need to know. That tells you that Bitcoin is bullish as hell, and you should not be fading BTC at the moment. If Bitcoin dumps from this, if everything's the same today, and Bitcoin gets a dump from here, well, then we should be looking for some lower prices at that point, right? And that tells you that Bitcoin might not be ready to break through this 28K level. We might have to revisit some of these lower levels down here, right? 24, 25, in that region. Let's go. Ripples. Been hearing that for quite a while, my man. I've been hearing the ripples for quite a while. It's nice being up 100% on on BTC. Mr. Hart said, Jordan, I got 40 students watching you right now. Can we get a shout out? Shout out to the 40 students. Mr. Hart watching the FOMC meeting with the students. That's how you know. That's how you know he's dedicated, bro. Shout out to all the students out there. I'll try not to swear if there's 40 students watching. I'll try not to swear. Who we got? John said Maya's breaking into cars again. That's funny. Chicken with no head hat. Yeah, facts. Chicken with no head pattern. Let's get busy. Man, this is a long wait. 6 minutes, man. This feels like the longest wait ever. You know? This literally feels like the longest wait in the history of waits. If you know what I mean. Oh, man. All right, guys. We're just kind of chilling out. Let's see what's going on. So the dollar's coming back down again. Dollar's getting sent back down. We got the S&P, which spiked up like crazy. Now we get a spike back down. So you're just seeing craziness across the board, man. Literally craziness. Look at that. Look at the S&P spike to the upside. Let's go look at the hourly chart on this bad boy. Look at this, guys. Woo! Look at that spike up and then the spike back down. It's crazy. The funny part is, like, this spike might turn into a candle again. you know, because like there's still 30 minutes left in this candle here, and Powell's speaking in 5 minutes. So this dirty wick could just be a full green candle again. You know, could be in theory. So we'll see. We'll see, man. We'll see. I know everyone always comes to the chat and acts like a genius, like they know what's going to happen. Guys, no one knows what's going to happen. Everyone's saying nothing's going to happen, or it's bullish, or it's bearish. Bro, do you have a time machine? You know what he's going to say? You know, that's the funny part. Oh man, all the little macro economists in the chat. Those are my favorite peeps in the chat, man. The macro economist knew nothing about the economic shit. I'm not gonna say I did. I didn't really know anything about it either. But we all sit in here and go, no, it's gonna be a 54 basis point rate hike. Inflation's high still. They need to continue their policy. Meanwhile, that was the same guy 2 years ago who was jerking off in their basement and didn't even know what CPI stood for. You know, that's the funny part. You know, it is what it is. Roll the dice. BTC is the time machine. Nice, bro. And normally I'm a big fan. You guys know me. I'm a big fan. Is listen to the charts, right? Big fan of listening to the charts. I'm a huge fan of listening to the charts. You know, and honestly, if I'm looking at the chart, I'm actually leading a little bit more bearish here. I'm not gonna lie. If I'm looking at the charts, just the chart, okay, I'm gonna lean a little bit more bearish. The reason why I say that is we're at resistance. We hit the 786 retracement. You usually always get a pullback when you hit a major retracement level, 0.5. If we bring up the fibs here, okay, if we want to be realistic, okay, and I hope this doesn't happen. I hope we pump. So don't confuse what the charts are saying, but based off what I want. Okay, I want it to pump, but you got to be realistic. The 0.5 retracement, we got to pull back. The 0.618, we got to pull back. The 786, I mean, we already kind of went down a little bit, but we are at that 786 retracement now, right? So just be wary there. And I don't like, at least right now, it could change, right? I don't like the little swing failed here that we have, which is the highs, right? The swing fail of the highs, right? Now, we're still holding above these highs right now. But if this comes back in here and like really starts dipping back down, it's not my favorite looking chart. I'm not going to lie. Plus on top of that, you do have a little bit of bearish div still, right? You got basically higher highs in price, right? And you got lower highs coming in on momentum here. So like if I'm just looking at the charts, it does look a little bit bearish, though we could be saved. And that's why I'm reserving judgment until the next 45 minutes are over, because we know how this works, guys. We know how this works. All right. Hit the likes. Key said, whoa, Jordan, the students. Oh, shit. I forgot there was 2 seconds. Someone said the other day that I got an attention span of a moth. I do have attention span of a moth. I forgot about the students already. I'm already talking about... All right, Powell in 1 minute, guys. Powell in 1 minute. Should we get a little hype going in the chat? Let's get a little hype going, guys. Let's wake up Asia. Asia wants to wake up right now. They got their alarm clock set for Powell. They're ready to start trading this. Are you? Let's see what we got. Let's wake up Asia real quick. Let's get it, man. Powell in 1 minute. Let's see what we got. Bitcoin kind of just doing its thing. ETH doing its thing. S&P pumping again. Dollar dumping again. That's perfect for middle schoolers. Let's go, baby. We got he's coming on in a sec here. Jordan teaching a whole class today. Hey! Let's get it, man. Spam that sushi. Spam that sushi in the chat. Let's get a little bit cooking in this craziness of a day. Let's go, baby. Crypto Shrimp said sushi. Let's get that sushi. Let's get that sushi, man. Pal's not on yet. Come on, Pal. Come back on the screen, bro. We're ready for you. We're ready for you. We are ready for you. Horse Guy's ready for you. Bob's ready for you. Bob is literally sitting here ready for you, man. Let's get it. At least to see some price action, man. Hold on. Let's this. Oh, not this freaking old man again. Oh my God, this guy's so boring, bro. I can't sit through this for a half hour.
Keeping New York communities
great, an ad.
means looking out for all our neighbors. So Governor
God, man. All right, here comes Powell, guys.
Mental health care and addiction treatment.
We gotta listen to this freaking ad.
Police on our streets. Thank Governor Hochul for prioritizing
What's up with these
our
ads?
safety.
Discover unforgettable travel experiences
God,
at getyourguide.com.
All right, here we go. This is gonna be great. Mom, can I get some meatloaf for the show? I'm probably gonna fall asleep on it. All right, let's see. All right, we got a nothing burger so far. Powell gonna give it to you. He gonna give it to you. Give it to you. Gonna give it to you. We got all the screens ready here, guys. All right, so here we go. We got the Bitcoin screen. We got the Ethereum screen. You can use this for altcoins. If ETH is pumping, that means your altcoins are going to be pumping. All right, so use Ethereum for your altcoins. And then we got the S&P right here.
Before discussing today's meeting, let me briefly.
And we got the DXY down here.
In the banking sector.
All right. It's hard to see the DXY because it's already been dumping so much
serious
today.
difficulties at a small number of banks have emerged.
Let's turn this up.
History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again. Turning to the broader economy and monetary policy, inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 0.9%. Consumer spending appears to have picked up this quarter, although some of that strength may reflect the effects of swings in the weather across the turn of the year. In contrast, activity in the housing sector remains weak, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Committee participants generally expect subdued growth to continue. As shown in our summary of economic projections, the median projection for real GDP growth stands at just 0.4% this year and 1.2% next year, well below the median estimate of the longer-run normal growth rate. And nearly all participants see the risks to GDP growth as weighted to the downside. Yet the labor market remains extremely tight. Job gains have picked up in recent months, with employment rising by an average of 351,000 jobs per month over the last 3 months. The unemployment rate remained low in February at 3.6%. The labor force participation rate has edged up in recent months, and wage growth has shown some signs of easing. However, with job vacancies still very high, labor demand substantially exceeds the supply of available workers. FOMC participants expect supply and demand conditions in the labor market to come into better balance over time, easing upward pressures on wages and prices. The median unemployment rate projection in the SEP rises to 4.5% at the end of this year and 4.6% at the end of next year. Inflation remains well above our longer-run goal of 2%. Over the 12 months ending in January, total PCE prices rose 5.4%, excluding the volatile food and energy categories. Excluding those, core PCE prices rose 4.7%. In February, the 12-month change in the CPI came in at 6%, and the change in the core CPI was 4.5%. Inflation has moderated somewhat since the middle of last year, but the strength of these recent readings indicates that inflation pressures continue to run high. The median projection in the SEP for total PCE inflation is 3.3% for this year, 2.5% next year, and 2.1% in 2025. The process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 4.75% to 5%. And we are continuing the process of significantly reducing our securities holdings. Since our previous FOMC meeting, economic indicators have generally come in stronger than expected, demonstrating greater momentum in economic activity and inflation. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, we no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. We will closely monitor incoming data and carefully assess the actual and expected effects of tighter credit conditions on economic activity, the labor market, and inflation. And our policy decisions will reflect that assessment. In our SEP, each FOMC participant wrote down an appropriate path for the federal funds rate based on what that participant judges to be the most likely scenario going forward. If the economy evolves as projected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.3% at the end of 2024, and 3.1% at the end of 2025. These are little changed from our December projections, reflecting offsetting factors. These projections are not a committee decision or plan. If the economy does not evolve as projected, the path for policy will adjust as appropriate to foster our maximum employment and price stability goals. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation. We remain committed to bringing inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening in labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
you. Colby Smith with the Financial Times. How confident is the committee that the recent stress that we've seen, and you've alluded to, is contained at this point, and that deposit flight among mid-sized lenders in particular has ceased?
Thanks. So I guess our view is that the banking system is sound and it's resilient. It's got strong capital and liquidity. We took powerful actions with Treasury and the FDIC, which demonstrate that all depositors' savings are safe and that the banking system is safe. Deposit flows in the banking system have stabilized over the last week. And the last thing I'll say is that we're undertaking a thorough internal review that will identify where we can strengthen supervision and regulation.
Just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. First, it was supported by a very strong consensus, and I'll be happy to explain why. And really it is that the intermeeting data on inflation and the labor market came in stronger than expected, and really before the recent events, we were clearly on track to continue with ongoing rate hikes. In fact, as of a couple of weeks ago, it looked like we'd need to raise rates over the course of the year, more than we'd expected at the time of the SCP in December, the time of the December meeting. We are committed to restoring price stability, and all of the evidence says that the public has confidence that we will do so, that we'll bring inflation down to 2% over time. It is important that we sustain that confidence with our actions as well as our words. So we also assess, as I mentioned, that the events of the last 2 weeks are likely to result in some tightening of credit conditions for households and businesses, and thereby weigh on demand, on the labor market, and on inflation. Such a tightening in financial conditions would work in the same direction as rate tightening. In principle, as a matter of fact, you can think of it as being the equivalent of a rate hike, or perhaps more than that. Of course, it's not possible to make that assessment today with any precision whatsoever. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
Mr. Chairman, can you explain the difference between ongoing rate increases and firming? Does firming imply a rate increase per se, or could policy firm without you increasing rates?
No, I think it's meant to refer to our policy rate. Really, I would focus on the words may and some, as opposed to ongoing. So we clearly were, what we were doing there was taking on board trying to reflect the uncertainty about what will happen. I mean, it's possible that this will turn out to have very modest effects. These events will turn out to be very, very modest effects on the economy, in which case, and inflation will continue to be strong, in which case the path will might look different. It's also possible that this potential tightening will contribute significant tightening in credit conditions over time, and in principle, if that means that monetary policy may have less work to do. We simply don't know. So,
do you have concerns that the hike you did today could further exacerbate the problem in the banks?
No, I mean, with our monetary policy, we're really focused on macroeconomic outcomes. In particular, we're focused on this potential credit tightening and what can that produce in the way of tighter credit conditions. I think when we think about the situation in the banks, we're focused on our financial stability tools, in particular our lending facilities, the discount window, and also the new facility.
Nick Timmeros of the Wall Street Journal. Chair Powell, in your testimony 2 weeks ago, you had indicated you thought the terminal rate would be higher. Obviously, that was before the stress in the banking sector. And I realize there's a lot of uncertainty, but can you explain at all to what extent your forecasts or those of your colleagues or those of the board staff incorporated today a material tightening of credit availability because of the stress in the banking sector, or are you waiting to see it in the data before you incorporate that potential tightening into your forecasts?
So, we've just come from an FOMC meeting, and, the people who write the minutes will be very carefully counting, but I'll tell you what I heard. What I heard was a significant number of people saying that they anticipated there would be some tightening of credit conditions, and that would really have the same effects as our policies do, and that therefore they were including that in their assessment, and that if that turned out not to be the case, that in principle you'd need more rate hikes. So some people did reflect that in their SEP forecasts. I think there may also just have been, remember, this is 12 days ago. We're trying to assess something that just is so recent, and it's people, it's very difficult. There's so much uncertainty. So December was a good place to start, and we wound up with very similar outcomes for December. And in a way, the data in the first 5 weeks of the intermediate period pointed to stronger inflation and stronger labor market, so that pointed to higher rates. And then this latter part, kind of the possibility of credit conditions tightening really offset that effectively.
To follow up, have you considered at all whether your primary tool, the funds rate, is going to be enough to sustain the kind of tighter financial conditions that you believe will be necessary without doing significant damage to the banking sector? Have you, for example, considered changing reserve requirements, selling assets out of the system, open market account, as a way to better achieve tighter financial conditions that don't accelerate deposit erosion, for example, from banks?
We know that we have other tools in effect, but no, we think our monetary policy tool works, and we think, many banks, our rate hikes were well telegraphed to the market, and many banks have managed to handle them.
Hi, Victoria Guida with Politico. I wanted to ask, you, along with the FDIC and the Treasury, the Fed Board decided to invoke the systemic risk exception to allow uninsured depositors to be protected at these two banks. And I was just wondering if you could speak to why that decision was made. Was it purely a confidence issue, or was there a concern that there would be some sort of economic contagion or financial contagion from the failure of these banks?
The issue was really not about those specific banks, but about the risk of a contagion to other banks and to the financial markets more broadly. That was the issue.
Okay, and then can you also, just to follow up, can you speak to the role that you will be playing in the Fed's internal investigation on its supervision and regulation? So
Vice Chair Barr is of course leading that review, and he's responsible for it in his capacity as Vice Chair for Supervision. I realized, right away that there was going to be a need for a review. I mean, the question we were all asking ourselves over that first weekend was, how did this happen? And so what we did was early Monday morning we sat down and said, let's do this, and he was obviously going to lead it in his capacity. So I don't, my role was to announce it, and I get briefed on it, but I'm not involved in the work of it.
Hi, Chair Powell. Howard Schneider from Reuters. So I want to go back to your February press conference. You mentioned the word disinflation, I believe, 9 or 10 times, a process that you felt was, I forget the word you used, but gratefully underway or something like that. Is disinflation still occurring in the U.S. today?
Yes. I mean, what actually happened, Howard, was I got the question 12 times. So maybe it's a feature, not a bug. But yeah, absolutely the same. The story is intact. So it's really three parts, right? Goods inflation's been coming down now for 6 months. It's proceeding more slowly than we would have liked, but it's certainly proceeding. Housing services is really a matter of time passing. We continue to see the new leases being signed at much lower levels of inflation. So that's 44% of the core PCE index, where you've got a story that's ongoing. Where we didn't have in February, and we still don't have now, is a sign of progress in the non-housing services sector, and that is, that's just something that will have to come through softening demand, and perhaps some softening in labor market conditions. We don't see that yet, and that's of course 56% of the index. So the story is pretty much the same. I will say that the inflation data that we got, to your point, really pointed to stronger inflation.
If I could follow up on that, I was curious why you don't see more coming from the credit crunch, because it seems to me that's something that you'd actually welcome to a degree and expect? And are you not seeing more coming from that because you don't know, or because you just don't want to have another round of wishful thinking?
So it's really just a question of not knowing at this point. There's a great deal of literature on the connection between tighter credit conditions, economic activity, hiring, and inflation. Very large body of literature. The question is, how significant will this credit tightening be, and how sustained will it be? That's the issue. And we don't really see it yet. It's so people are making estimates, people are publishing estimates, and but it's very kind of rule of thumb guesswork almost at this point. But we think it's potentially quite real, and that argues for being alert as we go forward, as we think about further rate hikes. For us, we'll be paying attention to the actual and expected effects from that.
Hi, Chair Powell. Gina Smilik from the New York Times. Thank you for taking our questions. I wonder if you could talk a little bit, I know that you've got your internal review coming, but I wonder if you could talk a little bit about what you think happened with oversight at Silicon Valley Bank, and whether this suggests that something about regulation and supervision needs to actually change going forward. And I wonder, how can the American people have confidence that there aren't other weaknesses out there in the banking system, given that this one got missed, as you noted?
So let me say what I think happened, and then I'll come to the questions around supervision. So at a basic level, Silicon Valley Bank management failed badly. They grew the bank very quickly. They exposed the bank to significant liquidity risk and interest rate risk, didn't hedge that risk. We now know that supervisors saw these risks and intervened. We know that the public saw all this. We know that SVB experienced an unprecedentedly rapid and massive bank run. So this is a very large group of connected depositors, concentrated group of connected depositors, in a very, very fast run, faster than the historical record would suggest. So as for us, so for our part, we're doing a review of supervision and regulation. My only interest is that we identify what went wrong here. How did this happen is the question. What went wrong? Try to find that. We will find that. And then make an assessment of what are the right policies to put in place so that it doesn't happen again, and then implement those policies. It would be inappropriate for me at this stage to offer my views on what the answers might be. I simply can't do that. Vice Chair Barr is leading this, and I think he's testifying next week. So, but that will be up to him. So that's really where it is. The review is going to be thorough and transparent. It is clear, to your last question, it's clear that we do need to strengthen supervision and regulation. And I assume that there will be recommendations coming out of the report, and I plan on supporting them and supporting their implementation.
And the final point, can we feel confident that these weaknesses don't exist elsewhere, given that they got missed at this bank?
These are not weaknesses that are at all broadly through the banking system. This was a bank that was an outlier in terms of both its percentage of uninsured deposits and in terms of its holdings of duration risk. And again, supervisors did get in there, and they were, as you know, obviously, they were on this issue, but nonetheless, this still happened. And so that's really the nature of the review, is to discover that.
Michael McKee from Bloomberg Radio and Television. You've been very consistent in saying that the Fed would be raising interest rates and then holding them there for quite some time. Following today's decision, the markets have now priced in one more increase in May, and then every meeting the rest of this year, they're pricing in rate cuts. Are they getting this totally wrong from the Fed, or is there something different about the way you're looking at it, given that you're now thinking that moves might be appropriate as opposed to ongoing?
So we published an SEP today, as you will have seen, and it shows that basically participants expect relatively slow growth, gradual rebalancing of supply and demand in the labor market, with inflation moving down gradually. In that most likely case, if that happens, participants don't see rate cuts this year. They just don't. I would just say, as always, the path of the economy is uncertain, and policy is going to reflect what actually happens rather than what we write down in the SEP. But that's not our baseline expectation.
Well, if I could follow up and ask, as you look forward into the rest of the year here. Are you saying that what you see and the 5.1% basically consensus is based on it will be sufficiently restrictive, or is it leavened by the idea of you don't know what's going to happen? In other words, what should people think about in terms of how the Fed thinks about how far it is from the terminal?
It's going to depend. Remember, we're looking, for purposes of our monetary policy tool, we're looking at what's happening among the banks and asking, is there going to be some tightening in credit conditions? And then we're thinking about that as effectively doing the same thing that rate hikes do. So in a way, that substitutes for rate hikes. So the key is we have to have policies got to be tight enough to bring inflation down to 2% over time. It doesn't all have to come from rate hikes. It can come from tighter credit conditions. So that we're looking at, and it's highly uncertain how long the situation will be sustained or how significant any of those effects would be. So we're just going to have to watch. In the meantime, and obviously at the end of the day, we will do enough to bring inflation down to 2%. No one should doubt that.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thank you for taking our questions. I know we've talked a bit about how Silicon Valley Bank was unique to a certain sector of the economy, but there's also growing concern that there are financial stability risks from the commercial real estate market and loans that will begin to roll over later this year and next, and that smaller regional banks also disproportionately hold those loans. Is there a risk that could mimic the kind of what we saw with SVB to banks that disproportionately are focused in commercial real estate?
So, we're well aware of the concentrations people have in commercial real estate. I really don't think it's comparable to this. The banking system is strong, it is sound, it is resilient, it's well capitalized, and I really don't see that as at all analogous to this.
Question, would you be open to an independent investigation separate from the Fed's probe?
I welcome. It's 100% certainty that there will be independent investigations and outside investigations and all that. So we welcome, when a bank fails, there are investigations, and of course, we welcome that.
Thank you, Mr. Chairman. Edward Lawrence from Fox Business. Inflation has been rather sticky, so do you need help on the fiscal side to get inflation faster?
We don't assume that. We don't give advice to the fiscal authorities, and we assume that we take fiscal policy as it comes to our front door, stick it in our model along with a million other things, and we have responsibility for price stability. The Federal Reserve has responsibility for that, and nothing is going to change that. So we will get inflation down to 2% in time.
And if I can follow on that, but they're working, the spending that's happened is working against what you are doing, right? So it's prolonging inflation?
If you have to look at the impulse from spending, because spending was, of course, tremendously high during the pandemic, and then as the pandemic programs rolled off, spending actually came down. So the sort of fiscal impulse is actually not what's driving inflation right now. It was at the beginning, perhaps part of what was driving inflation, but that's not really the story now.
Let's go to Neil Irwin.
Hi, Chair Powell. Neil Irwin with Axios. Two questions about aspects of the government's response on Silicon Valley Bank
Stocks
a few
to the
weekends
moon.
ago. First, why is this new bank funding facility done under emergency 13.3 authority as opposed to expansion of the discount window, changing the terms of the discount window that's been around a long time? And second, can you discuss the Fed's role in the FDIC guarantee of uninsured depositors and why there's $143 billion on your balance sheet last week supporting that deposit guarantee?
Sure. So 13.3 seemed like the right. We have a little more flexibility under Section 13.3. We've done quite a lot under discount window as well. We needed to do a special facility, so we did it under 13.3. Really no magic to that. It's only available in unusual and exigent circumstances, and it has to meet certain requirements, but it seemed to be the right place. So with the FDIC, we're lending to the, in effect, we're lending to the bridge bank. So that's where the funds came from, and it's a loan that's 100% guaranteed by the FDIC, so there's no risk in it for us.
Chris Rugaber.
Thank you, Chris Rugaber at Associated Press. The SEP suggests one more rate hike, as does the change in the language in the statement, in which suggests that you're perhaps nearing the end of a cycle of rate hikes. Do you feel, though, that if inflation remains high, you'll be able to resume additional hikes as needed, or have you somewhat tied your hands here with these signals about rate hikes coming to an end?
No,
Thank you.
absolutely not. No, if we need to raise rates higher, we will. I think for now, though, as I've mentioned, we see the likelihood of credit tightening. We know that can have an effect on the macroeconomy, on demand, on labor market, on inflation, and we're going to be watching to see what that is. And we'll also be watching what's happening with inflation and in the labor market. So we'll be watching all those things, and of course we will eventually get to tight enough policy to bring inflation down to 2%. We'll find ourselves at that place.
Hi, Chair Powell. Thanks for taking the question. Kyle Campbell with American Banker. I have a couple questions about the balance sheet. First of all, I'm curious at what point the financial supports that the Fed is extending through the discount window and through its enhanced lending facility might be at odds with the objective of reducing the balance sheet. And I'm also curious what your thoughts are on not just the availability of reserves, but the distribution of them throughout the banking system, and at what point you might be concerned about it being scarce for certain banks.
So people think of QE and QT in different ways, so let me be clear about how I'm thinking about these recent developments. So recent liquidity provision that has increased the size of our balance sheet, but the intent and the effects of it are very different from when we expand our balance sheet through purchases of longer-term securities. Large-scale purchases of long-term securities are really meant to alter the stance of policy by pushing up the pricing down the rates, longer-term rates, which supports demand through channels we understand fairly well. The balance sheet expansion is really temporary lending to banks to meet those special liquidity demands created by the recent tensions. It's not intended to directly alter the stance of monetary policy. We do believe that it's working. It's having its intended effect of bolstering confidence in the banking system and thereby forestalling what might otherwise have been an abrupt and outsized tightening in financial conditions. So that's working. In terms of the distribution of reserves, we don't see ourselves as running into reserve shortages. We think that our program of allowing our balance sheet to run off predictably and passively is working. And of course, we're always prepared to change that if that changes, but we don't see any evidence that that's changed.
Hi, Chair. Katerina Saraiva with Bloomberg News. The minutes of the January-February meeting, the last meeting, indicate that you discussed the possibility of runs on non-bank financial institutions and the impact of large unrealized losses on bank portfolios. Can you talk a little bit more about that discussion, kind of what was talked about in light of that? And then why didn't the Fed, do anything about that at that point to ultimately prevent, what happened this month?
I mean, to be honest, I don't recall the specifics of that. It's quite an interesting 7 weeks, but I will tell you though that there have been presentations about interest rate risk. I mean, it's been in all the newspapers. It's not a surprise that there are institutions that have had unhedged long positions in long duration securities that have lost value as longer term rates have gone up due to our rate increases. So that's not a surprise. I think, as you know, as is now on the public record, the supervisory team was apparently very much engaged with the bank repeatedly and was escalating, but nonetheless what happened. And so that's really the purpose of one way to think about the review that Vice Chair Barr is conducting, is to try to understand how that happened and try to understand how we can do better and what policies we need to change. I mean, one thing is the speed of I'll come back to that, the speed of the run. It's very different from what we've seen in the past, and it does kind of suggest that there's a need for possible regulatory and supervisory changes, just because supervision and regulation need to keep up with what's happening in the world.
Can you confirm whether or not the board knew about these escalations by the examiners in San Francisco?
I will have to come back. I don't know.
Simon Urbanovich with The Economist. Thank you very much. Chair Powell, you've stated twice today that all depositors' savings in the banking system are safe. Are you saying that de facto deposit insurance covers all savings? Shouldn't Congress have a say in that? And just by way of example, if a bank with less than $1 billion in assets failed, are you promising to bail out all of its depositors?
Well, I'm not saying anything more than I'm saying. So, but what I'm saying is you've seen that we have the tools to protect depositors when there's a threat of serious harm to the economy or to the financial system, and we're prepared to use those tools. And I think depositors should assume that their deposits are safe.
Thank you, Chair Powell. Greg Robb from MarketWatch. I was wondering if you could give us a little bit more color. You gave just a little bit of color. You said during the first week of the Silicon Valley weekend, you said the question you guys asked was, how did this happen when you saw Silicon Valley Bank? So I was wondering if you could go to the Credit Suisse merger. I mean, wasn't that the big gorilla in the room? Didn't you breathe a sigh of relief when that merger happened? Thanks.
Sure. So, that was really the Swiss government. We, of course, were following it over the course of the weekend, and we were engaged with their authorities in the way that you would expect, all the ways that you would expect. It seems to have been a positive outcome in the sense that the transaction was agreed to, and it has been, the markets have accepted it, and it seems to have gone well, and I think there was a concern that it might not go well. So coming into the middle of this week, yes, I would say that has gone well so far.
Nicole.
Hi, thank you, Chair Powell. Nicole Goodkind with CNN Business. In the summary of economic projections, the FOMC sees the unemployment rate increasing to 4.5% this year. I'm wondering how you anticipate preventing this from snowballing while using the admittedly blunt tools at your disposal.
So that's an estimate of what will happen as demand slows and as conditions soften in the labor market. And it's a highly uncertain estimate. And there's really, we have to bring inflation down to 2%. The costs of bringing it down, there are real costs to bring it down to 2%, but the costs of failing are much higher. And if you read your history, as I'm sure you have, you can see that if the central bank doesn't get inflation back in place, make sure that inflation expectations remain anchored, you can have a long series of years where inflation is high and volatile, and it's hard to invest capital. It's hard for an economy to perform well, and we're looking to avoid that, and and to get back to where we need to be, back to where we were for a quarter century, and get there as quickly as we can.
Historically, it's been hard to contain unemployment, and the question is, do you worry about some sort of snowball effect, and how do you factor that into your projections and your thoughts?
Well, it depends on whether so recessions tend to be nonlinear, and so they're very hard to model. The models all work in a kind of linear way. If you have more of this, you get more of that. But when a recession happens, the reactions tend to be nonlinear, and that's so we don't know whether that'll happen this time. We don't know. If so, we don't know how significant it will be. And so, we're very focused on getting inflation down, and because we know in the longer run that is the thing that will most benefit the people we serve. That's how we can have a long. We've had very strong labor markets through these long expansions that we've had. 4 of the 5 longest, or 3 of the 4 longest expansions in U.S. history have been really since the high inflation period. And the reason was inflation wasn't forcing the central bank to come in and stop an incipient or an expansion. You can have very, very long expansions without high inflation, and we had several of those, and they're very good for people. You see late in an expansion, you see low unemployment, you see the benefits of wages going to people at the lower end of the wage spectrum. It's just a place that we should try to get back to.
Chair Powell, Jean Young with Market News. I just wanted to ask, with all the events of the past 2 weeks, do you still see a possibility of a soft landing for the U.S. economy?
You know, it's too early to say really whether these events have had much of an effect. It's hard for me to see how they would have helped the possibility, but I guess I would just say it's too early to say whether there really have been changes in that. You know, the question will be how long this period is sustained. The longer it's sustained, then the greater will be the likely declines in or tightening in credit standards, credit availability. So we'll just have to see. I do still think, though, that there's a pathway to that. I think that pathway still exists, and you know, we're certainly trying to find it.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Just wondering how many financial institutions have been issued matters requiring attention or matters requiring immediate attention citations at this point?
How many? I don't know. But those are serious. Those are serious regulatory, particularly immediate attention. That's and I guess there were 6 of them. So.
And getting to the seriousness of it, how are you going to ensure that banks comply with these citations, take them seriously? How will we enforce them?
That is a great question and is right in the heart of what the review will be doing under Vice Chair Barr's leadership. So I think that's what you think about. You know, what can we do to make sure? But again, that's not for me to answer today.
Do you have specific thoughts on that?
Well, I see. If I did, I wouldn't share them because I really, you know, this review is going on, and you know, I want nothing other than us to find out what happened and why, figure out what we can do to do better, and then implement those changes. That's all I want. It's for me to be giving you my half-formed or partially informed thoughts. You know, it just isn't appropriate. There's a real serious review going on with people from all over the Federal Reserve System who are not connected to this, you know, to this work, not connected to this bank, and under again Vice Chair Barr's leadership, and I'm confident that it will produce a satisfactory result.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. Curious, how do you view financial conditions right now? If credit becomes expensive enough, choking off growth, as you said you're watching for, would that situation warrant a rate cut? What situation would warrant a rate cut? And have the bank failures prompted any discussion around changing the implementation of the balance sheet runoff? Thank you.
So we haven't really talked about changing the balance sheet implementation. That's not something we've discussed yet. As I mentioned, we're always willing to change that if we conclude that it's appropriate, but we're really not seeing any signs there. Sorry, then the question before that was, just give me a...
Curious how you view financial conditions now, and if credit were to tighten enough, if that would prompt a rate cut.
So financial conditions seem to have tightened, and probably by more than the traditional indexes say, because the traditional indexes are focused a lot on rates and equities, and they don't necessarily capture lending conditions. So we think that, though. So there are other measures which if they're focused on, you know, bank lending conditions and things like that, they show some more tightening. The question for us, though, is how significant will that be, and how, you know, what will be the extent of it, and what will be the duration of it, and then, you know, once you know that, there's a fair amount of research about how that with broad uncertainty bands, how that works its way into the economy over what period of time. So, you know, so we'll be looking to see the first part of that, like how serious is this, and how does it look like it's going to be sustained? And if it is, you know, it could easily have a significant macroeconomic effect, and we would factor that into our policy decisions. I mentioned with rate cuts, rate cuts are not in our base case, and you know, so that's all I have to say. So, thank you very much.
That's it. There he goes. That was kind of an awkward ending. Thank you very much. He just walks up. All right, so let's get rid of this. All right, well, we got a little bit of a drop. Now the meeting's done, so now we can let the dust settle, guys. All right, so here we go. The bears are gonna get loud again. Did we not learn from just a few, I think it was like a week ago when there was max FUD and then Bitcoin once again pumped up 40% in 3 days. Let's let the dust settle, man. Everyone's going to be bearish again. This is exactly what happens. You get a little bit of a pullback. Everyone's like, it's it. That's it. Watch, in like 3 days, Bitcoin will pump again. No, but you get a little bit of a drop, guys. So we're actually right back to the 30 EMA on the 4-hour time frame. So now we're kind of like, all right, we got a little bit of bearish engulfing candle on the 4-hour. It looks kind of bearish. I mean, that's why before the stream, guys, I did say if I have to lean one way, I'm leaning a little bit bearish just because we're at resistance. Okay, we're at the 786 Fibonacci level, right? We hit the monthly level, right? We hit the monthly level right here, right? We tagged the monthly low. Made sense for a little bit of a reaction there. How much of a reaction we'll get, who knows? Who knows? I would say, don't get too bearish too quick. You guys are funny, man. You guys are bullish yesterday. Now we're bearish today. Don't get too bearish too quick, my guys. All right. So, if we don't bounce from where we're at right now, which this is actually an interesting level right here. This is actually this previous high that we had from March 17th and kind of this like little range low that we had right here at like 27K even. If we don't bounce from right here, we got this 26.6 level we were watching for, and we also got this 25.2 level we're watching for, right? So, once again, let's not overreact. You guys are crazy. But all we're looking for, right, really in reality, is really any type of higher low to come in, right? So, our last low was at 19.5. We're looking for some type of higher low, all right? We're down, from the highs, I guess. I mean, if you want to even count the high today, from about 28.5, we're down about 1K. So after what, 13K move? Shit. So let's chill out. Let's do some como sa. I wouldn't be surprised in 2 days if we're right back in this 28K region and we're like, what the hell are we doing here? It is what it is. Let's see. The 27K level is the one? It could be, man. It could be. What was the last FOMC meeting? So the last FOMC meeting we had was, I believe it was like right around this area, right? I forget where it was. I think it was like right around here. We pulled back and then we actually like pumped right back to the highs a few days later. So, I mean, it is what it is. Let's let this play out. All right. Now you get to fortunately listen to the all loud bears. I told you so, even though we're still at 28K. Like, did you really tell us anything? That's always my funnest thing, right? You get a little bit of a drop and then it's all of a sudden it's I told you, Jordan, there's no more money to pump this market up. We're going straight back down. Yeah, we're still at 28K, but we're going straight back down. This run is over. It's over. That's always my favorite thing. It's the best. It never gets old. Horse guy is limited. Yeah, horse guy. And I don't know if you heard a few farts on the stream, guys. Horse guy got hit a few times pretty hard. I'm not gonna lie. I just got lost twice. I lost 2 trades in a row. I am literally screwed. Guys, I used my first rent money and my second rent money on a massive long. I am broke. What am I gonna do? I am literally broke forever. Is there any bears out there who can help me? You guys are the only one with money now. You guys got 1 trade right in 3 months. You guys must have money. All right. Oh, man. Let's see. Knucklebuster said we're going to chop for a while. We could chop for a little bit, man. We definitely could chop for a little bit. Let's see. Past week was pump before dump manipulation. Oh, facts, bro. That's why we're up here, guys. We said, like, we have to respect resistance, right? If Bitcoin broke through this, it was going to be super bullish. It is what it is. But you got to respect the resistance when you're at resistance, man. It's the 786 Fibonacci. It's the resistance. Just like when you're at support, you got to trust the support, okay? Now, you would expect a reaction here just because it's, like we've talked about how many times that this level is huge, bro, right? 1 support, 2 supports, 3 supports. This level is a huge level. So a reaction off this level is fine. It is what it is. We've reacted off resistance levels before. We reacted off this level. We reacted off the 618. right? Now we're reacting off the 786. You got to get reaction off every single fib level. So let's see how this plays out. You won't be finding me flipping all bearish because you got one FOMC meeting there where Powell says exactly once again, says the same thing. Guys, have we not been through this before? Let's rewind. How many of these FOMC meetings have we been through before? Right? Let's count since June. June, July, August, September. I think September was skipped. October, November, December, January, February, March. I think we've had 10 of them. 10 of them. Okay? 10 FOMC meetings. Okay? Where Powell said the same damn thing every single time. Yet Bitcoin, guess what? Bitcoin's up since June. All right? So let's do a little como sa. Like I said, I would not be surprised in 2 days if you see Bitcoin once again testing the 28.8 level. I would not be shocked, right? Because this was when everyone tries to short, and then they bring the price back up to get all those mother truckers who think they're a smart ass shorting, even though we've been through this a million different times, right? It is what it is. It is what it is. If I see anyone in the chat right now that's bearish, that was bullish yesterday, and then in 2 days Bitcoin pumps back up to 28K, and I see you being bullish again, I am coming after you, and you are going to be horse guy of the century because you're changing your narrative off one day, off of a nothing, off of what we expected. What do we expect? 25 basis points, and Powell probably saying the same thing he always does. If we say the same thing every time, and yet Bitcoin has been in an uptrend technically since June, right? And we've been through like 10 of these mother truckers. You know what I mean? Watch. I will not be shocked. We come back here in 2 days, Bitcoin's right up here. I would not be whatsoever. It's going to be great. No, but like I said, it is kind of short-term noise. Get off the hourly charts, guys. Go back to the monthly charts. Go back to the weekly charts. Nothing's really changed, guys, right? So that's really that. He said it best. It's short-term noise, man. It's loud noise. It's loud noise right now, okay? It's very, very loud noise, all right? But you know, like I said, in the case of a pullback, we're just looking for a higher low. That's it, right? Higher low, higher high. Higher low, higher high. Higher low, higher high, right? You come back down, we look for a higher low. Okay, bada bing, bada boom. I'm still not even convinced we go down there, to be honest. I'm not. I think everyone's going to get their panties in a bunch, and you're going to look like an idiot getting your panties in a bunch. That's my take. I really think if you're going to get your panties in a bunch, you're going to look like a little bit of an idiot. That's just me. But it is kind of a little bit of noise, man. It's loud. Holy guac. Funny, man. All right, where's the DXY? DXY is still with a massive red day, man. You know, massive red day for the DXY. And what's the stock market doing? Stock market took a little bit of a dive, actually bounced off this previous high, getting a little bit of a bounce. So, all right, guys, let's let the dust settle, right? I think right now is one of those times where everyone's going to have high emotions. You're going to have people panic selling, right? But remember, this move up was mostly spot buying. It's not leverage, right? So really the only way you're going to see this price move down is people panic selling. It's not like you're going to see a lot of long liquidations because a lot of this move up was not on leverage, right? So this will move down if people start panic selling. Will they panic sell? Nah, I wouldn't, honestly, I wouldn't, where should I say this? I would not be surprised because I've seen it before. But panic selling, any dips for me is for buying. You know, once again, you know, if we do come back down here, it's going to be price is going to move back up here, and it's going to be more salty bears, in my personal opinion. All right, that's my take. You take it for what it is. It is what it is. All right, guys, I'm gonna call it for the day. Let's see where we end up. I'm not going to stream tonight. I will be back. I'll be back tomorrow morning. Right? Like I said, let's let the dust settle. Okay, you guys look at the charts, make your own damn opinion. My opinion has not changed off of an FOMC meeting, which I was hoping it was going to push us over that 28K level, but you got to respect resistance, right? So adios, peace. I'll catch you guys at 8 a.m. tomorrow morning, and we'll see where we end up, guys. Let's see where we end up. I'm curious where we end up today, right? I actually really am curious where we end up today. Do we bounce right back up? Do we come back lower? Everyone's got an opinion. Before I go, let me know in the chat, guys. Let me know in the chat. Now that we got the news, what do you think comes first? 25K or 30K? Let me know in the chat. Now that we got the news, it was 67% earlier. Now what it is, I bet it's going to be the opposite. What comes first, 25K or 30K? Let me know in the chat right now. Which one you think's coming first, bro? Who we got? Interactive. Nola said boo. The money printer's turning on heavy right now. The money printer. Hey, I'd be down for that. I'd be down for that, bro. The time of the bear is now. Floki Tech, you've been telling me that for quite a bit, my man. Yeah, maybe it is. I don't know. I doubt it. 25K. Who's going to wake up Asia? We'll wake up Asia right now. I think they're already awake. They're already trading right now, bro. Asia's already trading right now. Let's go, bro. All right. Peace.